Traders, welcome back to our price action training lesson. We're going to use price action rules to help us navigate the market. Today's session opened with bullish trend working higher. We have confirmations for the uptrend. We had a high-low confirmation setup, but it formed right around the market open, and we don't want to be taking setups right around the market open. But because market keeps working higher, this is right now telling me that the bias right now is bullish, which means I'm not thinking about short opportunities, because selling against the trend, that's the bad way how to approach the market. You're going to have losing trades. I want to buy when the market is going to correct to the key entry point, put on EMA or the trend line. There I expect brand new push phase to start. So I'm just waiting my turn, expecting prices to correct. Market is correcting, so I'm going to navigate this correction by drawing the short-term channel, because there's a small trend line rule applied even for the channel. We have a new high. I have to reset the count at each new high if I'm counting for the high probability setup, which is a second entry. We have a new high, first entry long, and we're already breaking above EMA. So because the uptrend needs new high to be tested, some pullback here and a second entry long with nice bullish bar above EMA would be decent, because we really need to get new high. But there was no pullback. We just have a break, close outside, and we have new extreme. So uptrend played out, because you can see that this high is higher than the latest highest high inside the channel prior to break. So this high was exceeded after break, which means that right now I have to pause looking to go long, okay, because the trend line rule played out. Let's see what's gonna happen. So right now I'm just waiting. I'm gonna redraw the downtrend as well. They're pushing above EMA. I can't really sell just yet, and the reason is because we're going sideways and I can draw small consolidation. You can see that you have play EMA, push up, push down, push up, push down. And also number two, you broke above EMA here. And this is such a big of a bar, of course, 9.5 points. You definitely cannot sell almost 10 points bar. But there is some double bottom, potential support. We pushed above EMA here. This bar is way too big, so I can't take a trade just yet. It's tempting to go long here. Nice bullish bar of some multiple test. But uptrend just played out. So this is mainly a local gut feeling based trade, which more advanced trader can consider. But this is also, once again, gigantic bar. Now ATR today was very big, so bars were bigger. There's nice support, but it's better to be patient, because uptrend played out. I can't go short, I can't go long. This is area of development. I need established structure. Can I think about selling at the top of the trend range? Not really, because we traded up. So this is still what I call area of development. I need a little bit more information, because when you're watching this live, you want this trend range confirmed. We reverse down, so I have to redraw a brand new downtrend. And now it really looks like a trend range is confirmed, because we're bouncing off of these lows, we're bouncing off of these highs, consistent pricings up and down. So now when I'm watching this, everything played out, but it looks like the next market cycle after breaking new high is going to be a consolidation. So now what I want to do is I want to respect the range rules, which means buy low, sell high. I can't really go long just yet, because there's a brand new downtrend in play. I always follow the short-term trend line rule. There is no signal bar anyway. Close outside, new extreme, okay. Downtrend played out, and this is interesting. Now we have fell breakout. This right here is, it's like a fell breakout below this consolidation. Nice bullish bar. You can see broad break push to new extreme, so downtrend played out. And also visually, it looks like a one leg break, second leg down. So you have the visual two-leg pullback combined with the fell breakout. This is decent trade, great signal bar. You should go back at least to the EMA. So this is first decent high probability setup for today. It follows the rules. Downtrend played out, two legs down, and most breakouts are trend ranges will fail. Can I get a hello confirmation setup? Yes, but the signal bar is bearish, and I cannot go long above bearish bar. By the time I get a double bar entry, it's simply too big, closing too far up, because the short-term channel now is breaking new high. You prefer to buy closer to the EMA at the bottom, but signal bar was terrible, so I can't enter. If there's going to be break for the failed second entry, sure, there was no break, but had there been break, I don't really like it, because at this point it's quite stacked, breaking new high. There was no break anyway, and market reversed down. So when I see this, I'm no longer paying attention to this consolidation. Why is that? Well, because if this consolidation is the main pattern, then we should get the push all the way up to the resistance. This is what you expect following the trend range rules. Why we bounced in the middle and we traded down? There's empty room here, and we have some lower highs and lower lows. So you can see that once we got rejected in the middle and we broke down. This is where I'm no longer looking to go long. Number one, I have the downtrend in play, but more importantly, as you can see, the range is no longer being respected. I would need some stronger uptrend back into the trend range and some second entry long to convince me about going long. Once again, I need to redraw short and downtrend, break a new extreme, but now I'm not buying because, as we talked about, it's too bearish. I don't want to go long just yet. Break a new high. I was thinking there can be some wider channel breaking these highs, but as soon as we broke below EMA, I deleted it and market continues to go lower. So now I have to zoom back and I have to reanalyze the structure because it's clearly not acting as a trend range. In fact, it looks like a trend range but tilted down. So it looks like there has to be some weak downtrend working lower. So if I'm going to connect the highs and the low, this was not easy structure to trade because these super weak trends are always sketchy. But as you can see, this is very, very weak downtrend. It basically looks like a range tilted down, where the only way you want to enter is wait for the correction phase to end and take a lower high or failed second entry long below the EMA. Unfortunately, we instantly broke into overshoot, which means that right now we can expect stronger pullback in the opposite direction. Okay, overshoot is oversold area because we broke the trend channel line. You can see steep, sharp spike down. So now I expect stronger correction in the opposite direction. I'm drawing my trend line, as you can see, a little bit wider due to the overshoot, because I don't think that if I'm going to draw a tight like this is a break in new high. It's not really the case because you have overshoot, you're supposed to go higher. Okay, break a new high, and now we can see that the uptrend played out. So now we expect new low to be tested following the trend line rule, and this is interesting setup. We have some potential resistance here. This is technically not lower high, but you can sort of treat it as a lower high. You have a break in new high, first entry long failure, so lower high is a failed first entry long. Here technically it created a new high, so technically it's not lower high, but you can cheat that way. You're far from the EMA. One leg break, second leg up. You can see one leg break, second leg up, gray bearish bar. This is a decent setup, a little bit more advanced, but this is a decent lower high. Me personally, I was waiting for failed second entry long below EMA. Once again, technically this is not lower high, so don't be confused when I say I want to see failed second entry long below EMA, but I'm treating this way because after breaking new high, you have first entry long that failed. So can I get some pullback here? No horrible bar, and you're back above EMA. So this is not good. We're back above EMA, so I don't want to sell. No bar anyway, terrible tail. And once again, we're back above the EMA. So now I'm really questioning, hold on, what's going on? Is this downtrend gonna get the new low? Because overshoot can reverse the market. So I can see that we're not breaking lower, we're back above EMA, so I definitely cannot go short back above the EMA. So I'm pausing right now, I need more information. And market is completely retracing all the way up. Okay, so overshoot reversed the market. This channel was too flat anyway because it was super broad. And because I can see market working higher now, I have to redraw a brand new uptrend. And I would like to see a second entry long at the EMA, break, and a new high. But I think we're going to go higher because if I'm going to measure the first leg like this, we expect market to read the second leg. So let's see what's going to happen. And because market is so bullish, and we keep working higher, I have to explain why after breaking new high, market keeps consistently working higher. We can't even touch the EMA. So this is where I redrew a secondary channel, something like this. It fits perfectly. We still should test the new high, very close to the measured move. I'm going to redraw. Now, if I'm going to zoom out, you can see this is not a healthy trending structure. Why is this not a healthy trending structure? Sometimes beginner traders, they make the mistake and they only tunnel vision on this part of the chart. Remember, market cannot go higher or lower indefinitely. There needs to be consistent equilibrium, consistent push phase and correction phase. This is why trading market looks like push up, push down, push phase, correction phase, push phase, correction phase, consistent pricings up and down where you have healthy structured trend. But this is just one steep leg working higher, very broad pullback, and another steep leg working higher. So market simply cannot continue working higher indefinitely. So it's very common to get some stronger correction after the second leg. So this is just something you keep in back of your mind. This is not healthy structure because if you draw uptrend, this is super broad. As you can see, this is very broad, not enough information. So let's see what's going to happen. We're back below the EMA, so I can't take anything here. We have a very tempting high low, but it's part of the congestion. I can't really take it. We have about second entry short, which is a decent setup, but as you can see, we have a trend engineer consolidation. Most breakouts will fail, and we need to enter breakout pullback. So here you're buying the breakout. You're buying at the very top of the move. This is the failed breakout. So most breakouts may fail. So we need to wait for the breakout pullback. This was a decent enough entry. It's aggressive trade, but it's better to take the breakout pullback because here you're buying the breakout. You're buying the breakout. This was a clear consolidation. We're back below EMA, back into congestion. Inside bar, we're just going sideways. Doji, nothing here is going sideways. And now I can see it's getting way too late. And everybody's just taking profits. Market is about to close. So this is the overall structure for today. It was a slow price action today because today is rollover. As you can see, I'm trading the June contract already. So these rollover days can be very, very slow and choppy. So no surprise, we have such a slow and steady price action. I only see 2 good trades, as you can see, and even these ones are not those super textbook trades. So if you didn't take any trade today, not that big of a deal because it was a slow rollover trading day. So I hope you had a good trade. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.